Hello, this is Michael Hexter. Welcome to my Politics 2100 video cast here on YouTube. So today's episode is called The Fight Over the Budget Bill is about public leadership in money creation and distribution. And this builds on some themes that I've written about over the past decade or so regarding the struggle over money creation and the power of the purse and who benefits from the power of the purse that the federal government possesses, as well as other currency issuing governments. So this is my first video cast, or my first episode here on Politics 2100 that addresses an aspect of modern monetary theory, which I've written about a fair amount over the past 10 years or so. So, in any case, what you see now are politicians arguing in Washington about two bills. One of them is the Bipartisan Infrastructure Bill, that's $550 billion that has passed the Senate, and then we have the $3.5 trillion, so 6 times plus larger, over 10 years package that is it includes a variety of measures, including infrastructure, but also climate action related initiatives, also some an increase in the benefits in Medicare, vision, dental, and hearing, and so it is an assortment of initiatives that the Democrats want to pass, that they hope, they call it human infrastructure, and that they are that supports the agenda that Joe Biden campaigned upon in 2020. And so we have some Democrats like Joe Manchin, who is considered quote unquote a moderate Democrat, but more likely he's a corporate or right-wing Democrat in the Senate, who is saying he won't vote for the larger $3.5 trillion package just today on the Sunday shows. And he's been flirting all along with not supporting that bill. And we have other, we have in the House some conservative Democrats in the House that are, or right-leaning Democrats who are attempting to sideline the $3.5 trillion budget bill in favor of the bipartisan infrastructure package. And so the way this suite of legislation and policy proposals have been divided up, we have a portion that is considered bipartisan or considered to be uncontroversial to at least some Republicans, and so they have supported, some of them have supported it, and it's favored by the donor class. So as I've mentioned here on this podcast and also or videocast, and also in my blog Politics 2100 and in other writings on New Economic Perspectives, that the donor class, and is not original perspective with me, that the donor class, the mega rich and the large corporations that fund think tanks and fund politicians' campaigns, they largely run Washington, or they are extremely influential on most politicians in Washington. There are a few that are independent of them, including the Bernie Sanders and the Squad and some other Squad adjacent Democrats in the House. So, in any case, the perspective I'm trying to, or I'd like to introduce here, is that this is not only a struggle about specific sectors that are disadvantaged, or specific economic classes that are advantaged or disadvantaged by each of these bills, or differentially advantaged and disadvantaged, but it's also about the control overall of what is the role of government in controlling money creation and money distribution in the economy, or I sometimes call it distribution of liquidity and management of liquidity level of the in the economy. Because, and this is something that is a corollary of the basic premises of modern monetary theory, that the government is one of the two instances in our economy that creates currency, creates dollars, okay? And as is the case in other economies with other governments. And so the private sector, the private financial sector is something called endogenous money theory, and it's proven to be, or is shown to be correct in that banks create money, and then they withdraw that money, or what money is withdrawn from the economy as bank loans are paid off. So a loan creates money, and then bank loans withdraw that money from the economy minus the interest on the loan. So privately created bank money is deflationary overall of the economy, and potentially it causes various there's the company called the debt deflation model of depressions, and it is a fairly robust model that shows how for instance, the Great Depression or the 2008 Great Recession were created by runs on banks, as basically the banks or loans became due, and the economy was crashing, and then also banks were crashing because when they couldn't get their loans fully repaid, or and so we had an issue. We had the need for the more important liquidity creator or money creator in the economy, the government, to create massive amounts of liquidity and to prop up banks, and also to prop up the economy overall. And so in these two sources of dollars, in the view that I'm portraying here, and I've portrayed in the past, are in somewhat of a political competition. They collaborate, they cooperate, but if it becomes openly known to the public, as modern money theory suggests, if modern money theory becomes the standard economic narrative in Econ 101, which it currently is not, then the public will demand that the money creation facilities of the government, the ability to run deficits, which are, as I've written in the past, net contributions to the, and that language has been taken up recently by others, that the net contribution of the government to the liquidity of the to the savings, and also ability to spend of the private sector in the economy, and deficits are an inevitability within a growing economy in the capitalist system, and deficits. The word deficit, as I suggested about 7 or 8 years ago, is misleading, and it should be called a net contribution to the economy, and that immediately places the valence of in terms of the valuation, the moral valuation and the economic valuation of running a deficit. It reverses it, and which is not only desirable, but just it's simply a statement of fact. So for a currency issuing government, and not for a state like New York State, or California, or the city of Cleveland or something, which cannot run deficits on a long-term basis. So anyway, the point I'm trying to make is that the only point, but the perspective I'm offering here on the budget bills is that that there is a far more restricted bill that's considered quote unquote bipartisan, that is only the minimal maintenance on existing infrastructure plus a few small initiatives to prop up and also to advance. There is some electrical vehicle charging station investments in that bill, but the bigger bill is more like a Green New Deal light, very, very light. It's LITE, light. So it's not, it's and also more of an expansive vision of a better social welfare state that is something that Democrats tend to associate themselves with a little more than Republicans, or a lot more, depending on which Democrats or Democrat-affiliated politicians you are talking about. So the left and the right have different visions of how large a public sector should exist, and also how also the left is, in my view, not arguing in an effective enough a way about how that they could create and manage and grow that public sector that we definitely need to grow. And the reason why we definitely need the public sector to grow, or there are a number of reasons, but one of them is climate action, and that there are so many activities that are not profitable for corporations to engage in, that need to happen in very short order, that the government needs to fund. And the government could fund it as in the form of funding a private contractor to do that work for a public purpose, or by employing people directly to do that work in a public entity that was either newly created or an expansion of existing public entities of the federal government. And so this and the expansion, and also the creation of assets like for instance a renewable energy supergrid that would help share renewable energy in multiple climate zones or multiple weather zones around the United States, so that when the weather is not good for renewable energy in one area and better in another area, that the energy can be shared, so we can diminish and eventually eliminate our use of fossil fuels very rapidly. And so, and this has something to do with the still relative, while energy storage the cost of energy storage is going down and will continue to go down, we still will need this sharing function of a supergrid. So and that is only something that a federal entity would fund and would be a public project. So so in general, a vision that is addressing climate, addressing major social problems, for instance, the cutting out the inefficient for-profit medical funding or medical care funding in the industry, the insurance industry out of the picture, involves expanding the public sector to some degree, making a bigger public sector. And that means that the government would be spending more money on goods and services that are valuable to the American people, that would otherwise be inaccessible to them or too expensive for them otherwise, and so or just wouldn't be created. And so the two bills there, one is not this vision I'm talking about a very expansive, aggressive, I would say even using the French word dirigiste, or directed public planning and designing a new energy system that makes us independent of fossil fuels. I believe that's required for us to really cut our fossil fuel use dramatically, and which is absolute anathema to the Republican view of, and also some Democrats' view of how the economy works. But anyway, the control. So these two bills are on a continuum or a spectrum, where one is a very limited use of the public purse for, and it's not very expansive, and the other bill is somewhat more expansive. It would be probably one of the largest spending bills relative to the size of the economy in, maybe since World War II. And so it creates it creates a problem for this. So I sketched out that vision of what the government should be doing about climate change, and because I think intuitively many people know, people who are capitalists or consultants for large corporations, or executives in various companies and in financial services companies, kind of intuitively know that to really address climate change, there's not a lot of profit in it. And so to keep the game going of restricting the use of public funds for the public good, they need to constrict the possibility of using public funds for this kind of project. And so you have donors talking to people like Joe Manchin or Krysten Sinema or Josh Gottheimer in the House, who are saying they don't like at all this vision that's in the implied vision, or even the faint whisper of what needs to happen in our economy and in our society to really address, climate, healthcare, a bunch of very important issues, unemployment, housing, all of these big ticket issues that are not cheap to solve, and they know they don't have real solutions, so they want to keep but they don't want the real solutions to be implemented, or even the thought that they could be implemented. So I think I don't want to give this budget bill too much credence in the sense of saying that it's this expansive vision, but it is an opening to a society where people demand directly of government that government provide them directly with what they need. And there is a game in Washington of bipartisanship, of deficit worry, that is, and there's a recent TED Talk by Stephanie Kelton and also her book, The Deficit Myth, which help you understand, the function of deficits and the myths about deficits. But that has been used to politically it's not simply a matter of lack of knowledge. I think the actors we're talking about, the powerful people who the lobbyists and the Wall Street titans and what have you, the people who they know that the government can spend lots of money, and they just want to keep it for themselves. Okay, they just want to. It's not simple ignorance that they say, they are prey to a myth about deficits, and they're just sincerely misguided. No, these people know that there was a famous video, which I can put a link into the description, of Alan Greenspan letting the cat out of the bag about how the government can spend whatever money it wants, and deficits don't really matter that much to the federal government. And so I think if we can look at, and I want to introduce this is just the introduction to this concept, which I want to talk about in other contexts, but that there is a way in which we need to fight about public provision of liquidity, public provision of money to projects that need to happen for public good, and that is, unfortunately, there are many progressives who have unproductive or have gotten into an unproductive form of argumentation and political campaigning, where they're talking primarily and only about taxation and who gets taxed, and it's also really more about who gets the money, who gets the benefit of public spending, and how much public spending they get for, not directly in their pockets, but for the benefit of their community, of their way of life, or whatever it is. So in other words, that whether it's sequestered, and this is the word I've used in the past to talk about how the powerful want to sequester this power of the purse for their own good. And this is a behind the news form of it's a supposition, it's a hypothesis, but it certainly jibes with the way that modern money theory has been suppressed, or the simple observations, even though, as I say, Alan Greenspan essentially gave gave it away, in a testimony in Congress, that this is something that they want to keep under wraps, because they don't want people demanding that government do directly what they need. So I think that yes, the fact that Joe Manchin is against the budget bill has something to do with the fact that he's a coal baron. His corporate donors don't want to be taxed more, which potentially that bill will lead to more taxation. But also, they don't want to start a dynamic where the public becomes more and more aware, or they're already become aware, but become more and more aware of that they can and should be demanding of government that they spend on what's really needed in society, what we really require to have a decent, dignified society, but also a climate stable society. And that spending is a lot, and it requires it cuts out many of these middlemen, these powerful beneficiaries of the sequestered power of the federal government, when spending is done to, for instance, bail out a bank, or bail out a bunch of banks when the market crashes, and or tax cuts are offered for the rich because of some excuses about that they need to invest more, because we have basically trickle down economics. So I think that this is something I will continue to refer to, and this is sort of a general take on the politics of money creation and money distribution, and that is an area where I think the progressives and the left and the climate movement is not clear enough about, and not forceful enough about, and I think it could lead to some better outcomes if we start to articulate this and talk about it more directly. Anyway, thank you very much for listening to this video, and if you liked it, please like, and if you are enjoying other videos or like this video and you would like to see more, please subscribe, and also please share your comments below. And I've been skipping through a number of topics here, and let me know where I could perhaps sharpen and or fill in some gaps in what I'm presenting here. Anyway, I look forward to seeing you in the next video.